Donald Trump's debate with Joseph Biden became a real disaster. However, yesterday's debate with Kamala Harris went much smoother and did not arouse any panic among investors, so the markets could simply ignore the event. Nevertheless, investors prefer to speculate because this is the whole essence of a trader's work. So, how did the communication between the two candidates for the US president change market course? According to analysts, the chances of winning the US presidential election by Kamala Harris have increased significantly, and this outlook is bearish for the US dollar. The US dollar will have to shrug off expectations of higher tariffs and increased fiscal spending, which could support the US currency in the case of a Trump presidency. Interestingly, investors are not particularly disappointed looking at the chart of the US dollar index, which displays the position of the greenback against a basket of 6 major currencies. The index went down a little from 101.70 to 101.50. Most likely, this is how markets are preparing for crucial statistics. Investors are focusing all their attention on inflation data in the United States, which will be published today during the opening of the New York trading session. The annual rate of the CPI growth may slow to 2.6% in August. Inflation deceleration could convince the markets that the Fed Reserve can lower the funds rate at its next meeting by 50 basis points at once. Thus, there is a high probability of a significant weakening of the American currency. The EUR-USD pair resumed its upward movement. Technical analysis experts say that the instrument is going through a correction after it reached the local low of 1.1020. However, this movement did not lead to significant changes. The price returned to the upper border of the psychological area of 1.1000 to 1.1050. For a further decline, the price needs to settle below 1.1000. Most likely, today's inflation data will push the price even higher from this level. The oil market has not recovered yet, and oil prices continue to confidently go down. The chart for Brent crude has surpassed the level of $70 per barrel, which indicates a high excitement among speculators who ignore technical signals about the asset being oversold. In just 2 weeks, the Brent benchmark rate has lost about 15% of its value. It's a significant price change. Despite ignoring technical signals, profit-taking may occur sooner or later on the sell positions, which will lead to the serious upward pullback of the price. At the same time, technical analysis indicates that the breakdown of the $70 level supports the downward trend. If the price settles below this level at the end of the week, this may signal a lower decline. Yesterday's data from the American Petroleum Institute showed a decrease in the oil reserves by 2,800,000 barrels last week. It's a time to talk about the illogical behavior of the energy market. It does not suit the largest oil exporters, so the odds that OPEC and its allies will be forced to announce plans to reduce oil production in the near future. Much will depend on today's data from the US Department of Energy and the following response from the market. The dollar-ruble pair continues to consolidate around 91. The technical picture remains unchanged. The US inflation data published today will not affect anything. The market is much more concerned about the upcoming meeting of the Bank of Russia board this Friday, so the situation will hardly change until the end of this week, unless, of course, something extraordinary happens. So that's all we have for now. We monitor developments in the financial markets. Subscribe to our channel and stay up to date with the news with us. See you later.